Hi folks, Lee Gettess here with the Market Sense for the week of April 22nd, 2014. The charts we're going to be looking at come from the Trade Navigator software, and our first chart, as always, is the weekly bond market. Bonds seem to be trying to break out to the upside, but they are certainly in no particular hurry to do so. They just sort of, a little new high, a little new high, a little new high, and they just can't seem to explode up out of there like you might have expected them to. But I kind of thought they were going to hold around the 134.18 area or 133.18 area here, and they seem to be doing that okay. Um, not a lot of authority, not a lot of news this week to drive them, unless we get something bizarre out of Mario Draghi overseas Thursday. The resistance they're looking at here is 134.18 area, and the previous swing high here is 135.10. Both of those are very possible, and in fact, they could blow above 136 and get to the upper Keltner here because they, again, do seem to be trying to move higher. On the other hand, if they should break down, we've got support down here around the lower moving average is 132.20, and that would still be a much higher swing low, so nothing to prevent them from going down there and still sort of maintaining an uptrend. And I keep saying sort of because they're just sort of gently sliding up, haven't really blown out like I actually kind of thought they would. So the longer they spend without really accelerating, the more we've got to worry about them turning back down, I think. The stock market has a much different setup, as is normally the case. They've opened this week a little higher and just gone right up. The resistance is here in the, let's call it the 1875 area, and they seem to have run up to that level and are kind of trying to figure out what to do from here. If they blow out, we've got the previous swing high here, which is actually 1892.50, and they could go flying right up there. They could also stall here. I mean, this is resistance that they're into here. They could turn back down from here. The support that they should have held to start up is around 1847, and they, of course, haven't even been close to that. And even a move all the way back down here to the, oh gosh, what is that? That's like the 1820 area. That would look kind of ugly, but not really. They could still do that and move higher. The important thing in this chart to me is the fact that these bars here actually took out the previous swing low. Doing that indicates a little more weakness than we've seen in a while. And we have to watch either holding resistance here or possibly going to new highs and then turning back down. That would be sort of a broadening pattern here, reverse point wave, whatever you want to call it. I think there are two possibilities of the market turning down hard from somewhere in here, somewhere over the next couple weeks. Now, they could just go blowing right out of here and beat a 1940 and everything will be right with the world. But I just think you have to watch out for the potential for a failure here in resistance, or possibly a move to new highs and then a failure somewhere up here above 1900. So that's what we've got for you today. I hope you can find something profitable to get yourself involved with. Thanks for checking in to see what we think.